Okay, welcome to Stf trading floor. Someone been asked me on how do we take about our signals. So we found this is quite a key topic that we needed to discuss, and it's quite just a short topic on how we go about our signals and how we apply the three key factors when you are trading. One is patience. Number two is what we call risk management. And number three is effective trade management. So those are the key issues, and then which volumes are you supposed to use, especially when you are trading. That's another key topic, especially on VIX indices, because someone has been asking me on how do you use the VIX indices, or how do you know the type of volume that you use, especially for lower time frames. And to be specific, he said he had 300 USD account. So that's what we discuss right now. Uh, to be on an overview, our strategy, of course, we use price action, of course, what we term as the market structure and we capitalize on strong trending markets. Simple, the strong trading markets. We don't capitalize on anything else. So even if we have a very good trend and we are not on a strong trend, that one will not be trading. That one will shelf for another day. So we call like a swing trade trading kind of approach in the market. Like you can check, we do swing, like you can see, we've been swinging up with the, especially on a daily chart, is when you can be able to get very good trends. We've been having a very good uptrend, especially when it comes to like the yen crosses. And what actually happened is that now the trend has changed. I was just doing this one to confirm that the trend now has changed and we are dropping down toward the draw. So these are like a swing shot because this was a retest which failed from this new high. So from that time, the structure dropped down, and you can check here from this neckline now, it's total down trend. That is just one example. If you're going up, one and the same thing, especially currently, if you check on gold, what actually happening, we are experiencing is what we may term as a kind of swing long, or what we call a swing long, whereby the market is changing from a down trend to an up trend because the market has been making new lows. This one retested last week and failed, especially during NFP, to test this new low here. That tells you from this point, this one becomes like a higher low, and then if it challenges new highs, then you just wait for a retracement and move up uh, into a new higher highs. So, but when it comes to interest, we like going to lower time frames, especially on H4. This is where we look for specific candlesticks to enter, which is like the bullish and engulfing bar. We'll hit entries for buys, especially on these highs, like what we had yesterday on DJPY. Like yesterday, we had very good short signals from this point level, like this one here. We had a very good short. CDJPY the same. CDJPY the same. In fact, we had the short on the same price level on this candlestick here, price level. But this candlestick, if you check on higher time frames, it's just this candle you can check. We are moving up on a daily chart. Then we have a swing shot in the direction of the trend, and of course, the ADX can be able to explain the swing shot and the momentum, high momentum in the market. That's what we use in trading. So every time we hit an entry, the key thing comes is, of course, where do we place our TP and our stop loss? Like yesterday, if I place this is my entry, I'll check on the ATR on the daily chart. You see, it is 115 pips. So that tells me if the ATR, that means the average trading range for the last 200 candlesticks that are trading, it's here. That tells you, if you check the highest and the lowest, that tells you their volatility is 115 pips. That tells you if the market moves against you for more than 115 pips, then that is not your trade. So from there, you count 115 pips. If it's at such a point, from here to here, I think this is basic when you are calculating pips. Just go to 115. We are at the price 108.24. Just for demonstration, 108.24 there. If then I'm going to get to my TP, I take double of this so that you can be able to have a risk reward ratio of 1:2. So I'll go to, if it's 115, then I'll move down to 230 pips. For 230 pips, I'll come down at 104.84. So I'll come at 104.84. Yeah, that will be my TP. But again, don't forget, after like the first day's close, do not let your trade to go into losses. So what you actually do, will be our target. But our initial target, of course, will be 1 ATR. That means, like for the first trade, like you can check yesterday if this trade drops down for like, now it has dropped down to 150 pips. That tells you 1 ATR target is already hit. That tells you after 1 ATR, break even your trade on an average like 5 to 10 pips, and then let this trade drop down. Until then you can close. Even if it doesn't hit, you've already taken the first trade. That is how you approach this market from the first point. And then the traders will ask, which volumes are you supposed to use every time you are trading? Volumes are key in the market. So I always take like a minimum I can use is like if you have $100 and below, make sure like from $100 is ideal for trading, but that is the minimum I can go. But that one you should check just a 0 point, just a divide by 10,000. Anything that is below $400, like if I have like $300 and below, I always take 300, I'll divide by 10,000 standard lots, then I'll get 0.03. If it's 200, 0.02 volumes. If it's $100, 0.01 volumes, then I'll not trade more than 4 trades at any one time. Even if I would trade more than, if it is 0.02 and I want to get more than 2 trades, I'll better then go down to use 0.01 and use more. So that is the first. But when I go to 400 pips, $400, then at that point, I'll divide that further with 20,000 standard lots. Then from there, I'll get something which is 0.02, and I'll go a maximum of 6 trade. That tells me at any one time, I'll not be exposing my account, and I'll be able to trade for quite some time. So if like an example, if I have something like the current account of, if it is 90,000 or $20,000, that is one, that tells you that is one volume. I will use a volume of 1 and not more than 6. Like in my example, like using like in that one, if it is even 1, I can even use 0.5. 2 trades each, 2 trade in each and every trade, 2 open positions and each trade. That's how I like using. Like here, I will use 0.5, 2 trades. One hits 1 ATR, I'm out. But at the end of the day, if your trade is in good profits, like between 50 to 100 pips, do not let your trade go back to losses. You can even decide to close one even before it hits that one ATL value, break even the other with the 5 pips, let the trade solo, because it will not always hit these two. These are one ATL, 2 ATL, because liquidity is different and the market movement is based on so many factors. One will move, others will not. Yeah, that's what happens in the market. But let's now also go to what we call the VIX indices. We use the same strategy. Even if it's entries, we're using the same strategy. You can check here. We use one and the same strategy. You don't have two strategies, this one, and you can check this way you look for entries. We just draw in some few indicative elements to hit our entries, but then we use the candlestick patterns to hit our entries. So it's just one and the same thing. But here, when you're using the volumes, the key secret here, there's one guy who, like the one who was asking this morning, which volume should you be using? Anytime you are trading at this point, you can check like the bad thing about derivative indices, the derivative.com, is that they keep on changing VIX indices at trading volumes and trading assets. Like you can check when we started trading VIX 75, it was so common and the minimum volume was 0.1, but now it has reduced to 0.01. So it keeps on changing from one time to another, and these were the volumes that I had put on a tabular form. But this one you can check, they were for like quite some times back, and this PDF is for free if you want it. Just come to my DM or go to our Telegram group and you'll get it for free. So how can you then know the minimum volumes to use. You just come here to new order. What you actually do is at this point, let it be at 0, 0, even if you're using your volumes, your gadget, you can see, then you go to 0.01, you can see these ones, the buy and sell these buttons or these areas, they are not quite active, so they are not red on. But check now, sell or buy market, it is now seems that now you can be able to hit buy or sell. That tells you 0.05 for the X51S is the minimum volume you can use for those with smaller accounts, like 500, like the one who was telling you had $300, you can use 0.05. Because we had a trade like RB200, we had a very good sell here yesterday. This range break 200, we had a short order here. Yeah, we did trigger this short yesterday, and just to be specific, the entry point was here. The entry point was at this price level, and you use the same key thing when you are looking for TP and SL. So even if I'm here at the daily chart, to move to one ATL value, you can check here the ATL value is here now, 875 points. So you'll move from this point to 875. So you move up and all the way to 875. So 24 here. You can see we are at 824. 875 is around 10, 105, 329. So it is around this point, 105, 329. So this is a stop loss. 105, 329 there. Then what means if I'm moving down once again to 875, then I will be moving 875 times 2. This is where I'll come to look for the TP. And that tells you I'm moving to an average 1700. That tells me it is 102,686. 102,686. That tells you will be around 102. Yeah, there. You see, this is how you do it. But check how the market behaved. It just dropped up down yesterday. So what happens at the end of the day? Just break even one trade, don't wait for that. Like this one, I just closed it today because it had more than enough profits. And that's how I place my TP and SL, because if this market comes and hit here, that tells you this market may be changing the direction. But check at the daily chart again, it is a swing short at a very high momentum. That tells you I'm just riding. I'm just looking for this bearish and engulfing bar to hit an entry and then move down with the market. So that's how I look for my buys. Your buys, your SL. Even if you're using 200 or an S, just come here, look for the minimum volume. As simple as that. So you see, it is not deactivated. See, like this one is just 0.02 is the minimum volume. That's how you look for this. So every time I give a signal on our VIP channel, this is our VIP channel where we post all our signals. Like yesterday, the trade I'm talking about is this one. You can check where it was. So it is just one and the same price level. You can check SLTP. This is in our VIP. This is our VIP signals. You just get it for just $29. So this is where it is. And that's how we post all our trades for each and every day. So that's how you place our TPSL. That's how you look for minimum and maximum volumes to use both in currencies and both in VIX indices. So like if you have like something like 500 US dollars, just it like something like make sure that you use small volumes, the minimum volumes. Double that if you go to 1,000. If you go to like 2,000, you can triple the volume. Like that's how I do it, and I grow a small account to up to a huge account. Like the account that I started with, now it's at around 21,000 USD, and the account that I'm using is started from just I think 1,500 USD. The same to the currency, the one that I've been showing. So that's what happens when you're using if you want to use our signals, that's how you go about them. As simple as that. Don't complicate things. So that's how you trade smart.